Hey, what is happening, bulls and bears? Back with another dose of economic collapse reality. Yes, we are in an economic collapse. A lot of people, I'd say most people that don't dig into the type of news that we dig into here, I don't think most people realize what's happening. A lot of people just think that being in debt, massive amounts of debt, and continuously going deeper in debt is normal. Well, it is the new normal because that's common right now, but people think that there's nothing wrong with that, that that's just the way it's supposed to be, that everybody lives with debt, until their last breath. Uh, but that's not really how it should be. And that's why here we advocate for free markets. We want prices to correct to affordable levels where people don't have to just get buried under mountains of debt just to survive. So that's what we'll talk about here. We got a lot of news here on that front, the financial economic news, bank lending, corporate bankruptcies continue to increase. Inflation ticked back up again in our latest report here. We're going to talk about that a whole lot more. We're going to get into a lot of news here today. First of all, I feel really bad for the people over in Maui. Now, we could really get into what's happening in Hawaii. It looks like a nuclear war zone. That's how bad the devastation is from those fires. So, a lot of information we can get to on that. But the bottom line is 3,000 homes lost. A lot of people lost their lives. A lot of people missing still. Um, let's just talk about the financial part of it. 3,000 homes lost. What's going to happen now with the home prices? All these people looking for new places to live. What's going to happen to insurance prices? The insurance companies are getting a big hit. Insurance prices are going to explode higher in Maui and other areas surrounding, because now even Hawaii is looked at as a fire risk, right? If Maui can burn, uh, any place can burn. That's the way the insurance companies are going to be looking at it. Insurance prices have already skyrocketed. I hear reports from customers. I work in finance. Customers tell me all the time how their insurance costs have exploded, not just home insurance, also car insurance. We see the cost of health coverage and medical care continue to go up every year. Where does it end? Is there a breaking point? Well, the rescue programs are done, folks. We went from all-time high savings levels of people with record amounts of money in their bank accounts during the shutdowns of 2020, when just the opposite should have happened. When you see shutdowns and job losses, checking accounts should have dropped, but instead they went up because of all the stimulus, the shutdowns, the cancellations of all those expenses with the loans and rents, mortgages, etc. So we're just now getting down to near all-time lows of savings, right? So it happened in less than 3 years, all-time high, now back down near all-time lows. But yet, ever since 2020, they've been telling us that we're in an economic recovery. Okay, so just kind of wanted to paint the broad picture here. I know I talked about a lot during that intro, including what's happening over in Maui.
Let's talk about protecting your wealth. The US dollar has lost 85% of its purchasing power since the 1970s, when the dollar was decoupled from gold. And the government seems bent on continuing the tradition. From now until the next elections, the government can print as much money as they want. The last time they did that, inflation went up 9%. This means one thing: the security of your future and your family's future is all in your hands. Make sure you freeze the value of the wealth that you're holding. Invest in gold with Noble Gold Investments. Gold is the one asset that has proven to withstand recession, inflation, and just about all economic threats. Noble Gold Investments is here to help you if you want to invest in gold. You will also get a 24 karat 1/4 ounce gold standard coin for free. Go to bullboomgold.com now. That's bullboomgold.com, or simply call 877-646-5347. Noble Gold is the only gold company I trust. Link down in the description of this video.
Thoughts and prayers to all the victims there. But we do want to continue to just focus on the financial part of it here, because that's kind of where my where my research is best put. Where my news. That's kind of where my head is at. I'm not an expert on natural disasters, things like that, so I'll leave that up to the experts. Well, let's get into the financial news here. Let's start right here, and we are looking at a chart of the Dow Jones Industrial Average, folks. We're approaching the all-time highs that we saw back at the end of 2021. We're looking at a closing high of about 36,338 back then. Folks, we're at 35,281. So we're approaching that all-time high. Will it be a double top? Will the top 10% push prices up, push the stock market up even higher? Now, let's clear up a few myths here. There's a few people, a few clowns down in comments that have been saying uh, false information about what I talk about. A couple clowns are out there saying that I predicted a stock market crash. Never predicted such a thing. Could it happen? Absolutely. But let me just repeat it once again for the thousandth time. The stock market is mostly owned by the top 10% based on wealth. The top 10% of the population own almost 90% of all stocks. So let me just make it clear so everybody understands. When the top 10% decide to sell, that's when the stock market crash will happen. Will it happen? Well, go ask the top 10%. Typically, they'll wait for some massive scare situation like we saw in 2020 when we saw a pretty big drop. But remember that drop, and you can see it right here on the chart here, was also one of the biggest and fastest recoveries of all time. So we went from, let's see here, let's get to some numbers, from about 29,000, crashed down close to 35%, what, 19,000 approximate low there, only to surge back up within a year to new all-time highs, right? So stock market crashes aren't what they used to be. Why? Because of the ease of fast liquidity. Again, you can click a button, click a mouse, create trillions of dollars. They can pump the stock market up. The top 10% are very close to the bankers, that issue this money. So we know this is controlled. So anyone saying that I predicted a stock market crash, uh, they're smoking some really weird stuff because I never said anything of the sort. In fact, they could bring this market up to Dow Jones 40,000, 45,000 at the, yes, you know what I'm going to say, at the click of a mouse. That's how controlled it is. That's how fake our money is. Our monetary system is fake, folks. So we have to really remember that at the end of the day. So we don't really look at stock patterns here. I know a lot of channels are really focused on, look at this moving average and look at this, double top. I just talked about a double top a few minutes ago. Doesn't mean that it's going to happen, but it is something just to keep an eye on. Because remember, the ones that are controlling this market, one of their goals is to take your money. So when they see a bunch of people pile into the stock market because a lot of people are getting FOMO, fear of missing out, that's another reason for them to pull the plug so they can take your money. That's my view of the stock market. It doesn't mean that there's not buying opportunities out there. I am one to every once in a while dip into stocks, especially when you see a big sell off in a company that's strong. Um, so we'll keep you updated on that. I don't really watch that as close as I used to. So again, no prediction from me for a stock market crash. This is not investment advice. Let me know what you think down in the comments. I mean, what's going to bring these markets down? What's going to be the trigger for the top 10%, the top group that basically controls the stock market? What's going to be the trigger for them to hit the sell button all at once? I think it's going to be another global crisis. Maybe not the same as 2020, but something to that magnitude. And will they come in and pump it right back up again? Well, it's definitely possible. With our system of money, anything's possible. I remember a few years ago when I started talking about how ultimately the monetary system is going to start going towards precious metals. People laughed at me. Oh, JJ, you're crazy. That'll never happen. And now look what we have this year. We have the BRICS announcing at least partially a gold-backed currency. That's coming up later this month. We'll have to see, how serious that's going to be as far as how attached gold will be to the currency. But we do know it's coming back. Countries are waking up to the fact that we've been creating this endless amounts of money out of thin air for decades, buying goods and products that people actually had to work and sweat to produce, buying all these products that are made by manual labor out of money that's just created out of thin air at the click of a mouse, right? So countries are waking up. They're seeing how they're being abused and how their labor is being basically exploited. When you look at how the U.S. has outsourced so many jobs to countries with labor costs, that are much lower here, in the US. And we can only do that because of the world reserve currency. And the dollar's strong. I never predicted the dollar to crash either, because when you compare the dollar to other fiat currencies that are also created out of thin air, the dollar is the one-eyed king in the land of the blind. So I've never predicted a dollar crash either, but I am predicting further inflation, further cost of living pain. Let's talk about the latest inflation number here. We have prices up 3.2% year over year. They're saying that's less than expected. However, if you look at core CPI, which excludes food and energy prices, we're at 4.7%. Of course, we know the real numbers in the real world are a lot higher than this. In fact, let's go to a chart down here in the same article here. This is out of CNBC, and we see the latest reads here. Let's just focus on the overall CPI. They're telling us 3.2%. Now, remember, when you see this line come down, it doesn't mean prices are falling. It just means prices are up, just not up as much as previously. At the peak, we were looking at a inflation number over 8% year over year, and that was the summer of 2022. So now we're 3% higher than that. So we're comparing the number here, not a flat number. We're not comparing it to zero inflation. We're 3% higher than when we were last summer, which was 8% higher over the previous year. So you've got to stack these numbers basically on top of each other to see what's happening, to see what's really happening with the cost of living. So where's the good news at? Some people say I don't have good news. Well, here's some good news. If you're waiting for the cost of vehicles to come down, you're in luck. Did they come down that much? No, but the price is trending down. We're talking about used vehicles here. Let's go to the Manheim Used Vehicle Index. And this is going to show us what cars are going for at auctions. And auctions are a big source of where dealers get their vehicles. And let's go ahead and bring up a nice chart here. This is out of Cox Automotive. And first of all, we see the surge starting in 2020, where the index went from about 150 up to about 260, right? So prices didn't quite double, but they went up a lot. Going from 150 up to a 300 index, that would have been a doubling of prices. But 260 still, the biggest increase that we've seen in automobile prices in such a short amount of time. And prices have been very slow to come down, even in a risen rate environment. And we look to the far right here, we're now at about 211 on the index here. Well, let's just look at the percentage change. Used vehicle prices decreased 1.6% in July from June. So 1.6% just from one month to the next, folks. Annualize that, and you're talking about over 20% correction in 1 year if this continues to be 1.6% every month. And I just wanted to check my math on that. 1.6 times 12 months in a year, 19.2, right? So close to 20%. I know some of you call me out when I'm off by a fraction or something like that. So yeah, if this continues, you're going to see vehicle prices 20% lower 1 year from now. So are you going to be waiting to buy a vehicle if you're on the fence about buying a vehicle? Rates are high; they're staying high, and in fact, I wouldn't be surprised if next month we saw 1.8% from one month to the next, meaning that the price declines are getting bigger as we go into the end of the year. Who knows? Maybe by the end of the year, we'll see a 20% shave off these car prices. So people are struggling to pay for things, and there's going to be a limit to uh, prices being high. It's very slow. I was one of the only channels out there telling you that there wasn't going to be a housing market crash. I never predicted a stock market crash. Again, this is all controlled, it's all manipulated. They could bring car prices back up at the snap of a finger. All they'd have to do is put an end to vehicle repossessions. They could freeze everybody's car loan payments. And guess what would happen? They could send out checks for people to buy cars. Car prices would go up again just like that. So could that happen? Absolutely. Do I hope it happens? I hope not. Right. So I just wanted to say these things, like I just said, to let everybody realize this is all manipulated, right? Whatever they want the prices to be, prices will be. That's why I'm not in the business of making predictions. And I've always said here, I try to prepare for both situations. I prepare for inflation That's why I continue to stack silver. My favorite investment actually is silver right now. Why? Because I don't trust the system for one. I don't even trust a lot of the brokers right now as far as um, stocks. Having $100,000 on an E-Trade platform somewhere or Robinhood, I just don't trust the companies that much to to be honest, and to I don't feel like my money's safe, right? So yes, I invest, but I'm not very heavily invested in the stock market. I don't even like having a lot of money in my 401k. That's where a big balance of my money is. But I'm starting not to trust Fidelity and um, any institution. I just don't trust. And will FDIC be there for these institutions if and when they fail? A lot of people say it's just a matter of time before these institutions fail. So I like to have physical wealth in my possession. That's why I still like accumulating silver as much as I can. We're seeing banks fail. Can anyone guarantee that your stock broker, E Trade, Robinhood, TD Ameritrade, are they solvent? Or are they doing some shady stuff, behind the scenes? Well, let's talk about homelessness here. In our last report, we talked about actors going homeless, and a lot of you chimed in on that one. Many of you were saying that you really don't care what happened to these actors. They're overpaid. They're useless. Think about that. If they're useless, then why do they make so much money? Why are people out there spending so much money to watch these films? Why are so many people subscribed to Netflix? I think it's because a lot of people's lives are pretty boring, right? People just go to work, they come home, they watch movies, and you see people in the movies, their lives look pretty fun. But when it comes to the average American, most people are just sitting, watching a screen. Nothing wrong with that. I actually like movies. Um, I've watched a lot of movies in my life, and I really like the movies that give you a view on what could happen during like a global pandemic. Well, we already seen what could happen, but I like these post-apocalyptic movies, survival movies. So movies, they're entertaining. I think these actors are paid too much, and I think that no matter what occupation you're in, whether you're an actor, whether you're working at a store, whether you're a banker, that you should be ready for a job loss because the economy is changing very rapidly right before our very eyes. But on the topic of homeless, I know I digressed there, talking about what we talked about in the previous video because a lot of you chimed in on that one. Homelessness in Las Vegas census shows rise in unsheltered across Las Vegas Valley. Can you imagine in this heat being homeless? Here in San Diego, they're doing sweeps on homeless camps, and it's not a pretty thing when homeless camps are popping up, right on your corner. But it's also not a fun thing to see people just get swept up and just get thrown into the street. They lose their tent. Imagine having not much to your name. You have a tent, maybe some clothes, maybe some stuff you picked up along the way, and all of a sudden that gets swept away. It's pretty sad what's happening here. Clark County recorded the rise in the number of homeless people in shelters, emergency housing, or sleeping on the streets as official released the results. And the total count rose 16% from 2022. So from one year to the next, from 2022 to this year, up another 16%. And I've always said here, it's going to continue to get worse until the cost of living comes down. This is just going to get worse. Is it just about the cost of living? No, there's a lot of mental health problems out there. A lot of people doing crazy stuff they shouldn't be doing. But why are they doing those things? I think people are just having a harder time dealing with society, and they see that it's just a struggle, just to live paycheck to paycheck and just to keep your head above water financially. I think that's a big part of it. I think financial strain is a big part of the mental health issues, that we're seeing here in this country and across most of the world, for that. Now, one thing that people often ask me when it comes to real estate is, how did you know that the housing market would not crash? Well, look at some of these articles here. 1% down payment, rocket mortgage. Lenders roll out 1% down payment mortgages. That's as recent as May, but they're still happening even as of today. Home buyers loan program, California, assistance program there. Riverbank Finance conventional 1% down payment mortgage. CBS News as of June 7th. Some buyers turning to 1% mortgages. Guild Mortgage, down percent payment advantage, folks. all over the place. 1% mortgages. So of course, people are still buying homes. I just had a customer in Florida put their home on the market in 2 days. 18 offers. 18 offers in 2 days. The Florida housing market. And remember, Florida prices went up very rapidly. One of the highest growth for home prices over the past few years was Florida. Texas also is up there. Um, People still getting massive amounts of bids on their home when they put it on the market. So until they restrict some of this easy money, until they get rid of these 1% mortgages, you're not going to see a rapid correction in real estate. I know that's not what a lot of people want to hear, but I'll continue to, put it out there. What I think we should call this is a slow motion collapse. So invest accordingly, play your cards accordingly, right? So please let me know what you're doing down in the comments. How are you doing? I hope you're well. I'm hanging here in California, San Diego, still keeping my head above water, still getting by here. I'm doing a lot of different things though. I'm doing side hustles just to get by. I've got a family out here. Obviously, I do this platform here, this show. It helps me a little bit. Let me know how you're doing though. I'm very curious to hear from you. Thanks to everybody that supports this channel. Thank you for your tips and your super thanks. And, hope everybody's well here. We're going to go ahead and wrap this up, and maybe we'll chat with you down in comments of this video. See everybody very soon. Keep stacking. Bye for now.